In this video, we will be going over a very strong long-term trading strategy that revolves around the monthly time frame, specifically on Tesla. When this happens, there's usually a 45% chance that Tesla is going to go on a significant multi-month to multi-year rally. If we take a look at these stats over the past 15 years, we would have had a 44% win rate, a 3,500% return, with an average win of 390%, meaning that the average breakout is 390% to the upside, with the average winning return being 162% and the average loss being only 20%, which is absolutely insane, giving us a risk versus reward ratio of 20 to 1. We went over this exact strategy last month on AMD, which is already breaking out and doing very, very well. And my goal in this video is to share with you why this is currently setting up on Tesla, what this specifically means to me, and what the entry and exit requirements are. My name is Peter DiCarlo. I've been a full-time trader and investor for the past 11 years. All of my decision making is based off of technical analysis and my trading system. I don't care about the fundamentals of a company, the PE ratio, the current state of the market, or the economy. The only thing that I care is if the criteria for my trading strategy is being met. If it is, I'll take a position. If it isn't, I will move on. Now, this trading strategy only goes off of one very simple indicator, which will be the BX trender on the monthly time frame specifically. Now, the BX trender is going to be this indicator here at the bottom of your screen. You can get access to that indicator completely for free. The link to our entire trading system and indicators is down below, and the BX trender is part of step 1. Now, the BX trender is a very simple indicator. It just shows buying pressure and selling pressure. When the BX trender is green, it means that buyers are overtaking the market. When the BX trender is red, it means that sellers are in control. Now, I don't trade just based off of this indicator alone when it comes to my everyday trading strategy, but if I was somebody who was a long-term investor or looking out for a longer-term horizon, this indicator here, just on a monthly time frame, can save you so much money and so much pain. For instance, one of the biggest questions that I always get is, Pete, what do you do during a market downturn? What happens if we get another '08 financial crisis? Well, let's see what would have happened on the S&P 500 with this strategy during the '08 financial crisis. Well, the BX trender turned red December 2007. We would not have been trading at all to the upside from 2007 all the way to July of 2009, which means that we would have saved ourselves nearly a 50% drawdown, but a shit ton of headache. We wouldn't have had to worry while so many people were worried about, unfortunately, losing their homes, losing their business, their retirement going kaput. We would have just been sitting back and waiting for the market to finally time a bottom. Same thing in the dot-com bubble. We would have exited May of 2000. We would have tried to time the bottom here for a 6% loss, but ultimately we would have saved ourselves a huge headache and a massive drawdown. Now, if we look at Tesla specifically, at least over the past 10 years, because that's what I really care about more than anything, you can see that, yes, we would have lost more than we would have won. But that's not what we're looking for here. We're not caring about accuracy. We are caring about being positioned for a potential parabolic, meaning a significant run to the upside. And if that run to the upside happens, we want to make sure that we can actually capture the entirety of that breakout. Because what too many people do is once the breakout actually starts, they will just take profit too soon. So if we go back and look at 2013, we would have entered here at an average price of $2.54. Now you have to understand there have been multiple splits before then, but this breakout here would have been nearly 536%. Best part is it was over the course of a year, about a year and a half, which means you'd be paying short-term capital gains with this, which is about long-term capital gains with this, which is about 15%. You don't have to pay the short-term capital gains and get murdered on your actual taxes. Here, you would have had a small 9.5% loss, followed by a 20% profit and another 15% loss. So when we're losing, we are losing very, very small. From here, we would have had, once again, an insane parabolic run where the stock literally rallied over 980%. Once again, because this was over a year, you would have only paid short-term capital gains. Sorry, once again, I keep messing up. Long-term capital gains. So you would have only paid about 15% on those gains. Now, I need you to truly understand this. And this part here is what messes so many people up from a psychological standpoint. They think to themselves, there's no way that it could be this easy, right? That there are hedge funds out there who can barely make 9% a year. How is this guy with these ears telling me that I could have made over 1,600% in just 6 years? Well, here's the thing. This is easy. The actual taking the positions, the strategy, looking at this in the past is easy. But what is so hard and what 95% of people will not do is remain patient and stick to the strategy. You have to understand that after that 500% profit, if you were doing this on just Tesla, which I'd be doing this on tons of other stocks and diversifying, you would have literally not made a dime after that. Through all of 2015, you would have made a small profit through 2018 and then given it all back through 2019. So for 4 years, you would have made nothing. Your account basically would have sat sideways. And I need you to understand that mentally, how many people can really do that? Very little. But this is why patience is so important. Because if you could have actually stuck to that, you would have made nearly a 1,000% profit. Then you would have tried to time a breakout again, lost 24%, and once again, you would really have not made any money for over 3 years. Through all of 2022, you would have taken a small loss and then not traded through 2023. You would have taken a 30% loss in 2024 and not traded again until September of 2024, making a 23% profit, giving 13% back, and now you would be entering a position once again. And it's this psychology, this type of patience that just 99% of people do not have. Now, most of you might be saying to yourselves, why would you do something like this versus just holding the stock long term? And I can't speak for anybody else besides myself, but the main reason that I focus on doing this, if I was going to invest from a longer term time frame and perspective, is number one, I sleep like a baby. I never wonder, should I get into a position? Should I get out of a position? Is the stock market overvalued? Am I going to wake up tomorrow and lose a bunch of money? I don't have to worry about that. For instance, like we just said, going back to the S&P 500, while everybody was getting their teeth kicked in 2008, I would have been sleeping like a baby. Through the dot-com bubble, I would have went on vacation and just relaxed, cashed out, and been done. While everyone was freaking out during COVID, I would have been chilling. Through 2022, I would have walked away with the S&P 500 with a 40% profit and done nothing. And while everyone was freaking out, tariffs in 2025, I would be reloading on this macro breakout. So for me personally, my mental state and my psychology means more than any amount of money. And that is why I like this strategy specifically. Now, let's talk about the current setup that is here for Tesla. We know statistically we only have a 44% win rate. So, of course, there's higher odds that this is not going to happen than it is going to happen. But I will still follow this and I will still trade based off of this because if this breakout happens, I think it's probably going to be anywhere between 500%. It sounds crazy. It's maybe 700% over the next 4 years. Realistically, probably 2.5 to 3 years. Now, if we were to crunch the returns since IPO and we were to put this into a forward projecting line, and I know this looks crazy, but remember in 2020 to 2021, I bet nobody expected Tesla to run 1,000%. This is saying that we will most likely see Tesla the end of next year at $1,250, which would be a 188% move to the upside. Now, we know that the average return for this lasts about 13 months and is about 160%, which would still give us by the end of 2026 a target of about $1,200 to $1,1300. So will this play out? Odds are saying that it won't, but will I take this position? Will I give this target? Yes. Do I care about looking like an idiot publicly if this doesn't work out? I don't care at all. I did it with AMD and look at where we are right now. I hope this video helps. If you guys want to learn my entire trading strategy completely for free, you can get access to our entire trading library down below with all of our indicators. The BX Trender is right there, and I'll see you all next time.